What does the future hold for Bitcoin as it starts a new week in recovery mode? With the next block subsidy halving just a month away, and inflationary forces may not backing down, there's a lot at stake for the largest cryptocurrency. Will bulls be able to turn the tide and reclaim old all-time highs, or will selling pressure continue to dominate? CryptoMoon takes a closer look at these issues and more in the weekly rundown of what could impact BTC price action in the coming days and beyond. BTC price defensive below key resistance. After a brutal weekend, Bitcoin found itself at its lowest levels since March 6th, bouncing near 64,500 BTC/USD, then produced a solid recovery, almost reaching the $69,000 mark before they encountering fresh losses at the weekly close. At the time of writing, the pair circled $68,000, still unable to crack the area, well known as the site of its old all-time highs from 2021. And despite the setback, Bitcoin nonetheless managed its second highest weekly close ever, finishing the week down a mere $600 versus its previous close. Analyzing the current setup, popular trader Skew flagged the 21-period exponential moving average on the 4-hour chart as a line to reclaim next. Bitcoin's relative strength index readings on 4-hour timeframes, currently at 48.2, should also return above 50. Liquidity flush and funding reset, and I was trained for a lot to use outwater level of lines. Some of the latest market data captures the extent of the flush, which occurred across exchanges in the wake of mere 2-week lows. And so the million days of long liquidations totaling more than $300 million. So if we see that the largest global, the exchange Binance perpetual swaps, have little liquidity around price with a wall above in place at $266.
Sellers lie in wait above $69,000.
Was these windows of that bid timing for pre-halving retrace. And as Bitcoin miners enjoy its final month of 6.25 BTC box subsidies before April's halving, some believe that the current journey to all-time highs could be completed sooner than during other price cycles. Around the halving itself, however, Bitcoin may still stick to the classic playbook, lower then higher. And having years gone by, this danger zone that are produced corrections of up to 40%, far beyond the current maximum drawdown from recent all-time highs of around $73,700. Focus on Fed's Powell after FOMC. A crunch week for risk assets centers around the Fed's next decision on interest rates and accompanying commentary from Chair Jerome Powell. The next meeting of the Federal Open Market Committee will conclude on March 20th and forms a classic risk asset volatility catalyst. That said, markets are expecting few surprises this time. Persistent inflation has removed the chance of a rate cut, and even subsequent FOMC gatherings are not thought to be apt to buck the trend. With that said, thanks for watching, and until next time. And remember, why did the Bitcoin cross the road? Because it's decentralized and doesn't need a crosswalk.